Welcome to Cambridge House Live. I'm Vanessa Collette at the World Resource Investment Conference. Joining me today is Peter Spina, founder of GoldSeek and SilverSeek and regular keynote speaker. Welcome, Peter. Great to have you here with us.
Thank you for having me.
Peter, you were just in New York where you got to see Ron Paul speak. Did he have a heartening message for investors?
Yes, his message was very strong and it really rallied up the crowd, which was that gold is money, that this current problem that we've been going through the last several years continues to work its way through. So this current pullback in gold is not to be feared by investors, that gold is going a lot higher because the situation hasn't changed and it continues to go on. So.
You've been investing in the sector since the early 90s. Has your investing philosophy changed over time, and in particular in the recent times?
Well, there's times to take on more risk and times to take on less risk. So at the moment, I'm looking to take on less risk by investing more into the mining companies, which are producing cash flow and not at risk of this current pullback and difficulty in the capital markets of raising money. So that's currently where I'm focused.
Great. And you write a gold and silver weekly newsletter. What are you telling investors to do these days with their money?
Right now, it's a very interesting period in the gold and silver market. We have the gold and silver price pulling back, but the gold and silver stocks have had a very severe pullback, a lot larger of a pullback than the gold price and silver price. So we're seeing a lot of these assets on sale. That's not to say that they won't get cheaper at this point, so we're recommending to hold some cash to see if we can get some of these companies at even a lower price, but this is a very good opportunity. In fact, these are the lowest levels relative to gold that we see in the gold and silver stocks trade at. So from a fundamental perspective and a technical perspective, we're looking at kind of the capitulation in some of these companies and the mining companies. But with the exploration stocks, we tend to be a little more conservative, be very selective. We think about 80-90% of them are not really worthy of investments at this point. And the remaining companies will have some difficulty in the next coming several months. But there are excellent opportunities, and I think we look back in a couple of years from now, these will look like bargain prices.
A lot of people are saying that investors in this sector are running away from gold and silver. And you mentioned that a very prominent investor has been coming back to gold for the first time. Can you tell me a little bit more about that?
Well, there's been a lot of mainstream media focus on gold in the US, saying it's the end of the bull market, it's time to get out. Someone like George Soros is selling out of the gold market, but the latest quarterly filings shows that George Soros may be selling his gold ETF, but he's buying gold stocks very aggressively. In fact, he added about $40 million in the last quarter to the GDX and about $25 million in call options on the junior gold stocks, which is a very leveraged, high-risk play. So that shows that he believes that there's better value and opportunity in the gold stocks. So for someone who's supposedly very negative on gold, it's not represented in his about $250 million holdings. So it's good to look beyond the headlines.
So when someone like George Soros is piling into gold stocks or piling back in the sector, you think that other investors should follow that as well?
I think it's a sign for someone who has a lot of insight into the market, a lot of connections in the financial monetary world. I think it shows confidence that this market is nearing a bottom, that someone like Soros can take on that kind of risk and in a very risky sector as it is in general, want to take those sort of positions. So it's a sign of confidence.
Great. Moving on to paper currencies. In your presentation, you talk about various fiat paper currencies and how long they tend to last. What is the average fiat currency, what is the average lifespan for a paper currency?
Well, there was a study done, some 3,000 plus fiat paper currencies have existed in the history of the world. And only, none of them have lasted forever. I mean, we're looking at an average lifespan about 27 years, and that's what I was saying in my presentation. Gold and silver have been around forever. Paper currencies have not lasted very long. So, as we go through this period now where central banks around the world are printing money at a very aggressive rate, the Japanese central bank just announced a $1.4 trillion QE printing program, which will double their entire monetary supply. Those are very troubling signs. Federal Reserve, ECB, they're printing money like crazy right now. So those are going to have consequences, and eventually, really what it comes down to right now is a confidence game in these paper currencies, and that's what really the battle is right now. It's a battle of confidence and trust in these paper currencies.
That's interesting. And I've noticed that there's a lot of new currencies that have been popping up. I mean, there's Bitcoin, Amazon launched a new currency. Does that show you that people are starting to distrust the dollar more now?
Absolutely. I think it's a very bad sign for these central banks who issue these paper monies that there's competition and a lot of people are piling into them. Like you say, Bitcoin has some sort of a couple $100 million worth of market capitalization of the entire market. That is huge for a new product like that. So I think we're going to see more of that. There will be more of kind of attacks against these currencies from these authorities. So, it'll be interesting how it develops, but I believe the free market in the end will win out, and people will look for places where they can trust, currencies that they can trust, and it's very encouraging to see that there's alternatives coming around.
Moving on to quantitative easing, there's been a lot of talk that they're going to be tapering quantitative easing. Is that something that you think could happen? Do you think that they can actually stop printing money?
They may try to pull back a little bit. In the prior QE1 and QE2 rounds, they said that was the last of it, and then there was another round. So right now, Japan has kind of come into the game. They're one of the few central banks that did not enter the money printing game since in 08-09. So now they're coming into the game. So now it's kind of their turn to print money. So maybe it's just kind of it's alternating. But I think if we saw them to stop printing money and buying treasury bonds, that would be an absolute disaster. You'd see the free market price return and interest rates would shoot up, and that would have a very negative impact on the economy and for the U.S. Treasury and for the government, because then they would actually have to pay true market prices and true interest payments on their debt, which they don't have to do right now.
So looking at the sector here, I mean, we're at the World Resource Conference. Do you think, looking at these companies' valuations, that we're at the bottom?
It would seem so, but things tend to overshoot themselves on the upside and on the downside. So that's the difficult part, is trying to time this bottom. This market could continue to consolidate for quite a while. $1,300, $1,400 gold price isn't great for maybe the exploration companies, for the producers. A lot of them are still making money, although at these prices you have a report that just came out from the GFMS, which stated that over 10% or so the gold mines in production right now are losing money at these prices. So you take that combined with the fact that a lot of these exploration companies are no longer being capitalized and exploring for gold, with the mining supply issues as we have right now, the future doesn't look great for mine supply, which is very bullish for the gold price longer term.
That's great. Well, thank you so much for joining us today. It's been a pleasure having you here, and I look forward to having you back again soon.
Great, thank you for having me.